All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, and subscribe to the channel. Come find Jason on Patreon and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Let's get into it this week. So a very, very nice melt-up session really today and really all week long. We had a gap down on the the more war drum stuff going on here. You can see the ES Sunday night with the gap down, and it was really just a buy the dip here. So we talked about this over the last couple of weeks. Again, we don't want to be fighting this tape here and don't want to be fighting this trend. And we're looking for, more upside into middle of July. And again, as long as there wasn't any serious escalation in the Middle East, and even if there was, typically war tends to be bullish, tends to bring a more dovish Fed chair, it tends to bring tends to invite government spending, which is positive for markets. So that initial volatility is usually something that can get bought up here. And as of right now on the futures here, we're close to new all-time highs, but the cash S&P has made new all-time highs. You can see this nice pullback pattern here, and we've just kind of had an impulsive thrust through that. You can see the triple Qs here as well, making new all-time highs, hitting the 550 handle, which is an area we never quite got to in February. We're looking for that area to hit in Feb, and obviously the big sell, and then we are now up to that. Today high of the day was 549.99. So markets are still acting well here. And again, this is every time we get to new highs, there's always this thought that, oh, well, everybody's long, it's euphoric, but that's not really true at all. The positioning here clearly shows, and this is as of last week, it will change a little bit this week, but you can see here in red, this is commercials, this is banks, yellow is retail, and blue is hedge funds, large speculators. They are short this market. This market is heavily shorted by retail and hedge funds, and only banks are really long. So they're on the other side of the trade. Here's the NQ, the Dow, and the Russell. Same look here. So there's a lot of people trying to short here. And again, we talked about this before. This is not a trend you want to fight. We've had impulsive bull moves here. And a lot of the time when everyone has the same macro idea, these things can get priced in and the market can go higher. So we are seeing some squeezing going on, and probably pretty soon some performance chasing. My guess is we will see that positioning reverse a little bit, and we'll start to see hedge funds start to cover shorts and go long, by force. But right now, market is still hecting well, and we're close to that 6,200 handle, again, that we never got to earlier this year. And I think that's easily doable in July. And honestly, we're only 30 points away at this point. So if we could do it next week if you really wanted to. That said, a little bit of air in here. So we could see some backing and filling. Wouldn't shock me to see some sort of a dip, maybe in early July. We have end of quarter stuff going on right now. I thought maybe we would get, kind of pulled back a little bit towards, kind of stuck between 5,900 and 6,000. But yeah, impulsive break here, and just a lot of shorts that helps kind of fuel this market higher. So again, we're at new all-time highs, new weekly closing highs, and market is still strong right now. And it's not something that we want to be fighting. We've been talking about that really since April. Trend is your friend here. So market's still acting well. The Qs here up 42 basis points today. The Russell 2000 also trying to get a weekly close above that 200 moving average, and the same thing above the weekly 50. So again, strong patterns here across the board, and we'll see if small caps. This is actually the most crowded short index out there in the market right now too. So this may have more upside in July. See the Dow breaking out as well. So very nice pattern here on the weekly. Nice little tight range and a nice thrust. That is now less than 3% away from all-time highs as well. Semiconductors here breaking out also. So coming into a double top here. So not that far off. We got NVIDIA at new highs as well. AMD, very nice recovery there. TSM, Broadcom, both at all-time highs also. So again, semiconductors finally coming back and making it back to that elusive new high. IGV also not that far off here as well. So a lot of these tech names have come back very nicely, and you're seeing even the XLK at fresh highs as well. So just a very strong tape here, not something we want to be fighting. Transports here also trying to break out. Still got some resistance up here at about 15.7, but again, higher highs, and this has come back pretty nicely. A lot of things being priced into the market here as well. Looking out to July, we flip over here to the daily chart of the 2-year as we flip over to interest rates. We can see that we have come down quite a bit, and it's now looking like a July cut is definitely on the table. You can see here in yellow, Fed funds is at 4.35. We're at 3.75. That is plenty of room to make a cut. So at this point, there's been a lot of speculation, a lot of talk about politics with the Fed. If they don't cut here, to me, it's quite political because there is plenty of room. Now, a 25 basis point cut is really nothing, but assuming this doesn't rip back higher in the next 2 weeks, this is cut room here, and that market is now starting to price in the possibility of 3 cuts this year. So we'll see if that ends up being the case. 5s, 10s, and 30s, a little bit on the longer end, are up today, but they have come off the highs. So yields coming down pretty much across the board. Nothing crazy on the long end, but they have come down. XHB here back above that 97 handle. This is starting to come back as well. So putting in a little bit of a base here, and we'll see if that can push. If it can, you got 102.50, and then maybe even back up to that 200 moving average. If we look at the weekly here, this has got room maybe even to 110 if it can get through that. So XHB looking a little bit better. VNQ had a little dip yesterday. Just keep in mind, this is a dividend, so it's actually not. If we look at an IYR, it's a little bit more accurate. I do like this pattern a lot on the weekly. And again, IYR is essentially the same ETF. It's just run by a different fund. But yeah, nice pattern here on the weekly. That is ready to go if it wants to break out next week. I do like that weekly setup. XLF here just off of all-time highs as well. We've been talking about that. JPM, big market bellwether, that closing at new weekly all-time highs. Also, KRE here, close to new monthly highs. But again, nice base here on the weekly. KBE, new, 3-month highs. And broker-dealers, of course, new all-time highs. And that is getting close to that 1,000 handle. We got oil here up 1% today. I cannot do anything with oil here. I get questions about oil every day. Massive gap and crap. Okay, so that airstrikes that happened last week, again, a lot of that was factored in with this run up here. So it doesn't matter that, I think even if the war escalated, I don't think that they would have gone much higher, because I think everybody who wanted to buy was already in, a week or two ago. So it would have been hard for this to go much higher. That said, I still think oil remains elevated, but right now, it has backed off. I just can't really do anything with it. There's just too much volatility, right? 2 weeks ago, we were at 64. A week ago, we were at 78. Today, we're at 64, right? 65. So there's just too much volatility. This needs to tighten up and put in some sort of pattern. If this were to break down to like 62, though, I might get interested for a quick long. And that would be retesting this trend line, be retesting this breakout shelf right here. So that's where I would get interested if it had a dip. But outside of that, there's just this is way too messy for me. But oil obviously down this week. XLE trying to hold, this needs to reclaim 86, and then I think I can try to go higher here. It is trying to make higher lows though. I do like that. So that's your positive there. XOP and OIH are essentially the same. You got nat gas here up 5% today. So holding that 345 area. Uranium stocks quietly continuing up here. CCJ down today, but big up week. URA, again, continuing to chug higher. NM and MJ and nukes all maintaining a nice uptrend here. So uranium continues to climb. Not being talked about a lot, but they are holding up very well. Dollar index down, again, a little bit of weaker economic data this week. Again, that goes hand in hand with the rate cut kind of expectations. Right now, though, I would say if the dollar can break back above 98, it can squeeze a little bit. There's a lot of shorts in this too. but the data has been, bearish for the dollar, so it's been going lower. But if we start to see bearish data for the dollar and it goes up, that means shorts are getting cut. So just be aware of that. Gold has backed off a little bit here again with geopolitical fears calming down. That has been the case a little bit. And it's interesting because rate cut odds have gone up, but gold has gone down. So a little bit of a change there. GDX is down a little bit today too. Still just off all-time highs. Nothing terrible here yet. Nothing really to worry about. But they have backed off a little bit this week. Silver backing off as well. The weekly chart still looks fine though. Nice bull kind of, mini bull flag there. And I still think it wants 40, maybe even 42.50. So platinum and palladium, again, another very good week here. It is backing off today. They are both backing off, but again, I've been talking to you guys about this for a long time here. And I said, Sprott is something I like. And this has had a nice rounded bottom here. Look at palladium. This is not going to break through that. Platinum here at, multi-year highs now. So I've been talking about this for probably a year or two now and saying this is good value down here. It's deep value in precious metal space. And they have had a nice run. So it required a little bit of patience, but it's started to play out. Copper making higher highs also. And a nice bull base here. We were kind of neutral on it for a while, but it has put in higher lows and equal highs. And looks a lot better here. And last but not least, of course, Bitcoin. Nice rebound again. Just beautiful spike of the low on Sunday night, and then boom, right back up. It is dipping a little bit here the last couple of days, so this might roll over inside of this range. I wouldn't rule it out, but again, this is not bearish. Again, it's just because it's making lower highs and lower lows doesn't mean it's bearish. Just look at last year's example. I mean, you have pretty much a perfect parallel to this pattern, and now a smaller one here. So no changes until it really, if we were to lose 92 again, then I would say we're in more of a danger of more lengthier consolidation. But right now, as long as we're up inside of this upper structure here, no problems here. So overall, again, market's acting well. We just, we're making new closing highs, new all-time highs. And again, don't fight this tape. I get messages every single day about short selling and can we short? Trend is up. We're making new highs. We've been adamant about this for months now that we should, trade up into the summer, and that's where we're at here. So do not fight the trend until it gives us a signal that it's ready to reverse. But anyways, guys, I'll wrap it up here again. You guys take care. Have a great weekend. Come find Jason on Patreon. Come find me on carnivaltrades.com. See you guys all next week.